What if I told you that your financial future could be predicted, not by the stock market, but by the decisions you make every single month? Not your salary, not your age, not even the next market crash, just your habits. So I decided to test an idea. Instead of asking, "How much money do I need to retire?" I asked a completely different question. What would actually happen if an ordinary person invested consistently for the next 30 years? No lottery ticket, no crypto millionaire, no inheritance, just an ordinary investor with an ordinary paycheck, following one simple strategy. So, I built the simulation. Every month, our investor buys high-quality dividend-paying businesses. Every dividend is reinvested. No market timing, no panic selling, no shortcuts, just patience, discipline, and time. But here's the interesting part. I didn't start with a millionaire. I started with someone much more familiar. Meet Alex. Alex is 30 years old. He works a normal job. He earns a normal income. He has bills to pay, rent, groceries, insurance. Life isn't perfect. But every month, after paying for everything he needs, he invests what's left. Sometimes it's $500, sometimes a little more, sometimes a little less. He isn't trying to get rich this year. He's trying to become financially free one day. At first, nothing exciting happens. His portfolio grows slowly. The dividends are tiny, a few dollars, then a few more. If you looked at his account after the first year, you'd probably think the strategy wasn't working. And that's exactly why most people quit. Because they expect life-changing results from life-changing habits far too early. But here's something most people never realize. The beginning of every successful portfolio looks painfully ordinary. No headlines, no excitement, no overnight success. Just small decisions, repeated again and again and again. So the question isn't, can dividend investing make you wealthy? The better question is, how long does it take before the results become impossible to ignore? That's exactly what this simulation is going to answer. Not with opinions, not with motivational quotes, but with numbers, realistic assumptions, and 30 years of disciplined investing. Let's see what happens during year one. Year 1. Alex invests $500 every month. By the end of the year, he has contributed $6,000. His portfolio earns its first dividends. They're small, barely enough to notice. But Alex doesn't spend a single dollar. Every dividend is immediately reinvested. The amount feels insignificant, but the habit isn't. Because habits are what this simulation is really measuring. Not luck, not predictions, just repeated decisions. Year 3. The portfolio is finally beginning to feel real. The balance is growing. Dividend payments arrive more often. Still not enough to change Alex's life, but enough to prove that the system is working. This is the stage where most investors become impatient. Nothing looks extraordinary. The progress feels slow, and that's dangerous. Because this is exactly when many people stop investing. They convince themselves, it's not worth it. I'll never have enough. I started too late. But every investor who eventually becomes financially independent had to survive this exact stage, the boring years. Now let's fast forward. Year 5. Alex receives a raise at work. He has a choice, a nicer car, a bigger apartment, or a bigger investment. He chooses the investment. Instead of increasing his lifestyle, he increases his monthly contribution, not dramatically, just enough to stay ahead of lifestyle inflation. That one decision changes everything, because every additional dollar invested today will keep working for decades. This is something many people underestimate. Investment returns are powerful, but increasing your contribution can be even more powerful. Imagine two investors earning exactly the same return. One invests $500 every month forever. The other starts with $500, but increases that amount a little every time their income grows. 20 years later, Their portfolios may look nothing alike, not because one investor was smarter, but because one understood a simple truth. Income creates opportunities. Ownership creates freedom. Year 10. Something remarkable happens. For the first time, Alex notices that his portfolio is contributing in a meaningful way. His annual dividends are no longer symbolic. They're becoming useful. They won't pay all his bills, not even close, but they no longer feel imaginary. The machine is beginning to work. Not because the market suddenly exploded, not because Alex found a perfect stock, because 10 years of consistency have quietly compounded into something tangible. And this is where the simulation becomes interesting, because from this point forward, time begins working harder than Alex does. By year 15, Alex notices something he never expected. His portfolio isn't just growing because of his monthly contributions anymore. It's growing because it has developed a life of its own. Every quarter, dividends arrive automatically. Every payment buys additional shares. Those new shares generate even more dividends. For the first time, his money is creating more money, without asking him to work another hour. This is the moment most people imagine when they first hear about passive income. But what they rarely see are the 15 years that came before it. The discipline, the patience, the consistency. There was no shortcut, only time. Now let's jump ahead. Year 20. Alex opens his portfolio on an ordinary Tuesday morning. Nothing special happened overnight. The market didn't double. There wasn't a miracle investment. But something feels different. His annual dividend income has reached a level where it can cover a meaningful part of his lifestyle, his vacations, his insurance, most of his groceries, some months, even more. For the first time, he realizes something powerful. If he lost his job tomorrow, his investments would continue paying him. Not enough to replace his salary completely, but enough to give him options. And options are the beginning of freedom. This is where many investors make a surprising discovery. Financial freedom doesn't arrive all at once. It arrives in stages. First, your portfolio pays for small pleasures. Then, it pays for recurring expenses. Eventually, it pays for necessities. And one day, it replaces your paycheck. That's why focusing only on the final number can be misleading. Because your life improves long before you reach complete financial independence. Now let's fast forward one final time. Year 30. Alex is no longer excited by stock prices. He no longer checks his portfolio every day. Because the goal was never to build the biggest account. The goal was to build the strongest income stream. His investments now generate approximately $5,000 every month in dividends. Not because he found the perfect investment, not because he took extraordinary risks, but because he stayed consistent through ordinary years. 30 years sounds like a long time. Until you realize, those 30 years will pass anyway. The only question is this: when those years are gone, what will they have built for you? Let's take one final look at Alex. 30 years ago, he wasn't chasing passive income. He wasn't dreaming about $1 million portfolio. He was simply trying to make one better financial decision each month. That decision never felt extraordinary. Most months looked exactly the same. He invested, he reinvested. Then he repeated the process, again and again and again. Looking back, it almost seems too simple. But that's exactly the point. Building wealth isn't complicated. Staying consistent is. Because the greatest challenge was never the market. It wasn't inflation. It wasn't even choosing the right investments. The greatest challenge was continuing when nothing seemed to be happening. Most people quit during the quiet years, the years when progress feels invisible. the years when every contribution seems too small to matter. But those quiet years are where every great portfolio is built. One ordinary month becomes 12. 12 becomes 60. 60 become 360. And suddenly, 3 decades have passed. The question was never whether time would pass. It always does. The real question is, what will time build for you? Will it build a larger collection of things that slowly lose value? Or will it build a collection of productive assets that continue paying you for the rest of your life? Because every dollar has a job. You decide what that job is. It can be spent once, or invested to work for you again, and again, and again. That's the difference between earning money and owning the assets that produce it. If this simulation teaches us anything, it's that financial freedom rarely arrives through one brilliant decision. It arrives through thousands of ordinary decisions, made consistently over many years. No one can go back and start investing 10 years earlier, but everyone can decide what happens next month. And that single decision may completely change the next 30 years of your life. So before you close this video, ask yourself one simple question. If your future depends on the decisions you make every month, what decision will you make this month? Thank you for watching. If you enjoyed this simulation and want to see more realistic investing scenarios, subscribe to Steady Cash Flow. Every week, we'll break down timeless investing principles, dividend strategies, and the mindset required to build lasting financial freedom. Until next time, keep building your future, one investment at a time.